Welcome to TradeTheMBI.com. This is John. This reports for the 17th. Well, that break below the 50% was not a shock. MBI white leading, fading off at the beginning of the day so far here, holding right around that 38%. But under its current conditions, if there's more selling, clearly going to move to the 23. The shakeout continuing to break down. And actually, magenta at minus 10, not quite below the yellow. If that dips below the yellow, that's a clear indication that you're going to have significantly more selling. So perhaps we're going to just get a little bit more of a softer kind of breakdown. We're still red line below from the extreme histogram here, and that's where you get the magenta color, and that just lets you know that the selling hasn't abated at this particular time. What we would be looking for is if we could see some improvement from a shakeout. You would get also an increase, sort of like here, where you get a green line in the extreme. That's kind of an indication that there's some stabilization. And last time that happened, you hold support. When you don't have that, you're continuing to bleed. And so we look at the Nasdaq, which had been considerably weaker, had already shown that capability. So there's money flowing more. Just into different areas at this particular stage, but you just don't have the enthusiasm. I mean, what's the incentive to buy at this particular stage? You've got Israel with the imminent threat of attack, Iran saying that if they do, there's going to be all sorts of problems, the U.S. not wanting that to get involved, just a myriad of other concerns from an economic standpoint. So what are you going to do? Well, before, where treasuries were way out of line yield-wise, are getting much closer to that now. And so that becomes a bit more attractive, even though it's clear that inflation is not abating. The question only becomes, is oil exploding? If there is a situation, then oil will definitely skyrocket, but it's held off at this particular stage, still an extremely elevated level, which is going to lead to further price increases coming, literally more towards the election period, which probably the worst case scenario. Fed had to admit such that they really don't have a handle on inflation. It's odd to me because it just seems like a rather simple thing. You decrease the cost of energy, and lo and behold, you'd be amazed at how inflation drops. It's not rocket science, but boy, they can't seem to figure it out. The euro, trying to stabilize, even though it's still making more lows. And again, I've talked about this. There's no real justification for the euro even at this level, and it was certainly a bonus for anyone in the EU to dump their euros for any other currency for the most part, most likely dollars in this case because it's a euro-dollar situation. But as bad as it is for the dollar, it's worse for other currencies. But that's where commodities, and in this case gold, is still the shining example. Excuse the pun, maybe not, because everyone always talked about how crypto was going to be the way to go from there. And relatively speaking, though, when you consider the fact that Bitcoin had such a dramatic move while gold really wasn't going anywhere, the fact that crypto's moved back a little bit still keeps it relatively proportional. And, this is pretty similar to what the market readings are when you look at the MBI readings, DOC spread and that. But you've got short-term buyers keeping some of that holding on. And the fact that, you get your halving coming up, that'll be an interesting one because you're going to have to see price rise in order to justify those miners getting half of what they used to get, and continues to degrade their returns. That's part of the liquidity because miners sell their earned bitcoins to keep a bit of float going. From an ETH standpoint, though, you can see filling back positive extremes all the way to the beginning. Nice. It's super clean. Love it when the algos do exactly what they say they're going to do. And from an intraday standpoint, you can see that we started early on in the day with the MBI white spike. That led to the expectation of a move back to zeros. And any punch that you were expecting when we got to the 23 was also negated here with that other spike of the MBI white. And sure enough, it satisfied with its return back to the 0 point. So that's all been pretty clean. And this is one of those where things started to get a little bit of bullish behavior with the magenta leading, and it looked like nice. But when you're below that 23%, what I look for is this move right here, where you get a cross of the steel. When you have that steel above cyan for extended period of time, you're going to get a continuation move. It's not until it resets with a dip below cyan, or even a move below red or green in this particular case, would do the same thing. And that led to a little bit of stabilization excitement, but that was short-lived because just broke down from there, and that was coming off of rising gold. So when you're below 23% rising gold, and you don't get a break above that holds you, you're going back to zero, and you're going to make new lows. It's just pretty much a given at that particular stage. So pretty consistent within that broader scope of things. And I think that was kind of something we discussed on the Skype chat, where it was like, yes, the readings were positive, but given that position, it was unlikely it was sustainable. From an intraday, you can see quite a wild range. I mean, they were just taking advantage of killing some of the put gamma, and then sells off again, and it's just about that option decay that takes place. But overall, still finishing not horrible. I mean, it's a pretty modest move overall. You can see in the pre-market suffering a little bit of degradation in the European session, because there's just nothing that's exciting right now as far as positive. But sometimes within that broader negative, it's not so negative that there's going to be continued selling. I think that you just have a little bit of a hold off right now with fear, because it is an unknown. And if there's an attack in Israel, does it get broader? Is Iran going to spread to attacking U.S. interest in the Gulf? And that becomes too big an unknown in too many ways for people to want to commit to anything other than just being liquid at this particular stage when it comes to that. And again, if some are concerned is starting to sell, there's just not enough room on the exit to prevent things from falling very quickly. So it's just the reality of it. But on the converse side, if things turn out to be a little bit more rosy than expected, you could see a very significant upside swing. So it's just a matter of following what the readings are and going with that, and that's always the safest play anytime. So there you have it, the long and the short of it for now. As always, though, anything relevant, I'll put it on the Skype chat. Trade well. Have a good one.